All right, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. Hope everybody's having a great trading session. And I'm going to get you guys caught up here ahead of the FOMC, which obviously is coming in here in a moment. Well, actually in about an hour and a half. So, one thing I was looking at is this dollar Canadian. I sold a little bit of mine this morning when we were up in the 80s. Now we're down in the 50s, and I know we've been down here before, but you got to be a little, I am a little nervous with the US dollar Canadian down at these levels. And it's really, I mean, I know it's the Canadian right now and the dollar that's generally speaking kind of weak, but it's actually crude. If you haven't seen crude oil, crude is just ripping back to 40 bucks. This has been more surprising than anything. The crude is right back up towards resistance here. So that's something that stands out kind of like a sore thumb. I actually expected crude to move lower. This is a flag, and it actually went the opposite direction that I thought, because I thought we're trending lower. We got a pennant, and then it broke the other direction, which has been, like I said, rather surprising to me. I didn't expect that big of a reversal, actually. Now, one of the other things I want to talk about is the euro. The euro's pretty weak. One of the reasons why I think the euro's weak is that we have the euro crosses are moving lower. Let's start with like the euro yen. The euro yen has broken this neckline, this head and shoulder pattern, so that's weak. If you look at the euro sterling, we're below the 38% retracement. I thought we'd bounce somewhere around here, but it has been under pressure today. So that's kept the euro just in general under some pressure. And you look at like the euro Aussie, euro Kiwi, both, matter of fact, let me draw this because I haven't updated this chart yet. There's the euro Kiwi, taking on some pretty key trendline support. And then the euro Aussie has broken this like uptrend that's been kind of holding us for the last month or so, but we're actually probing those levels. Now a lot can change following the FOMC. So but actually before I go into this, well, you know what, let's talk about the FOMC. So the Fed, the market's obviously expecting a dovish Fed. I mean, that's why stocks are holding up their gains. That's why we're challenging this 34.25 resistance. Okay, and let me delete this really quick. Okay, and that's why we're holding up. No one's going to sell knowing that the FOMC coming up here in the next couple hours, hour and a half, is probably going to be dovish. I mean, are you expecting a hawkish FOMC? No, no one is. So the risk here is, you get, and by the way, I do think a lot of people are expecting a non-event for the FOMC, but looking how the dollar's reacting, looking how stocks are reacting, that may be true. They may be expecting a non-event, but they've already positioned themselves for a dovish FOMC, right? So if for some reason the FOMC comes in a little bit more hawkish, or maybe they say some things that you think, wow, the Fed actually feels fairly good about the economy, even though they're going to keep rates unchanged forever, and we're not getting any fiscal stimulus between now and the election. They still seem a little bit more upbeat than we had thought. That is then a risk for equities to come down, and the dollar would strengthen as a result. So just remember that anything that's construed as not so dovish, that has the ability of reversing some of the moves that we've seen as of late. Now, I wouldn't really be worried about equities unless we get below 3,300, which it's 100 points away from here. We're not going down there today. Even if we went down, I doubt we'd break that today. Even if we sold off a little bit back towards the 3,350, I doubt we're breaking 3,300. But that's what I'll be watching in the days ahead in the event that stocks come down a little bit. Also, as I've often talked about, I'll be looking at gold, which is just brushing up against this underside of this trend line, and there's a risk of us breaking higher above 2,000 again. But if gold starts to slip back below 1930 or so, then you have to start being a little bit more cautious with what gold's doing. But overall, guys, the last thing I want to talk about is the breakdown of the dollar yen. So the dollar yen is, excuse me, let me grab a drink really quick. 1 second. Sorry. Okay. So the one thing I want to mention is the dollar yen, even though it is breaking down, the dollar yen is not the other dollar pairs. I know I talk about that often, but it's not. I don't look at the dollar yen as being, just your average dollar pair. It's more of a yen trade versus a yield trade versus a dollar trade per se. And if bonds go up and yields come down a little bit, that's probably going to have more of a negative impact on the dollar yen. But all in all, I do believe that the dollar yen, this is a bearish breakdown. And as long as we trade below, I would say like 105.50, there's no reason to be on the long side of the dollar yen. I look at the other yen pairs as being, more bearish. Like here's the euro yen, the pound yen is just kind of holding its lows. Aussie yen is at risk of breaking through this trend line support right here. Kiwi yen is not bouncing, and remember this is a multi-year trend line right here. That one, I know I've talked a lot about it, but that one right there, that's why I keep a short New Zealand yen exposure. And the Canadian yen's rolling out of a ascending wedge, and we're trading at the 200-day moving average. So these yen pairs look like they could all buckle under pressure. It may or may not translate into the rest of the dollar. So don't, if you're looking at the dollar pairs today and you're looking how the dollar's responding, I think you've got to remove the yen from your analysis. Okay. Don't follow the yen so much. Follow like what's happening in the euro dollar. The cable's kind of doing its own thing because of these Brexit headlines, which, by the way, I've missed a lot of the headlines because I was out this morning. But anyway, like I said, I think you should probably focus on maybe more what's happening with the euro, the Aussie, the Kiwi, the Canadian, not so much what's happening in the yen. All right. All right, guys. So good luck today with the FOMC. I'll see you guys in the chat room. And remember, if you guys have not signed up for, well, first of all, we have this like special offer. Now this is for you guys that are already members of ForexAnalytix too. We have this new seasonal offer that we haven't had an offer in a few months, and we're actually giving away like to 3 winners, a 3-month free ForexAnalytix. That applies to you. If you guys are ForexAnalytix subscribers, retweet that tweet from ForexAnalytix where we talk about the offer, because if you retweet it and then you tweet to ForexAnalytix and say, I want to be part of the giveaway, then you will be included. And if you win, not only will you get a t-shirt, which by the way, I wear my t-shirts probably every day because they're so dang comfortable. Not only will you get a t-shirt and mug and all that other stuff, but we'll tack on 3 months onto your subscription. So if you win. So guys, good luck. Thank you all. And thanks for listening in. Good luck for the FOMC. I'll see you guys in the chat room. All right. Thanks.